Hello viewers, welcome to our channel Trade AKR. Friends, most day traders prefer to use candlestick charts for their analysis, but most have not heard of the Heikin-Ashi Candlesticks. Heikin-Ashi Candlesticks have gained popularity by day traders to identify a given trend more easily. They look pretty similar to Japanese candlesticks at the first glance, but there are still some significant differences between them. In this video, we are going to discuss Heikin-Ashi Candlesticks, how these modified candlesticks work, and how you can use them to give you a different unique perspective and maybe change the way perform your chart analysis. The Heikin-Ashi technique can be used in conjunction with candlestick charts when trading securities to spot market trends and predict future prices. It's useful for making candlestick charts more readable and trends easier to analyze. For example, traders can use Heikin-Ashi charts to know when to stay in trades while a trend persists but get out when the trend pauses or reverses. Friends, as you all know, most profits are generated when markets are trending, so predicting trends correctly is necessary for making big profits. Heikin means average and Ashi means pace. Taken together, Heikin-Ashi represents the average pace of prices. Heikin-Ashi candlesticks are not used like normal candlesticks. Dozens of bullish or bearish reversal patterns consisting of 1 to 3 candlesticks are not to be found. Instead, these candlesticks can be used to identify trending periods, potential reversal points, and classic technical analysis patterns. But before going forward, be sure to hit like button and subscribe to our channel for more knowledgeable videos like this. And also take a note that first of all, you need to know a Heikin-Ashi candle has a body and an upper with or without a lower shadow, wick. A Heikin-Ashi with a green body with no lower wick represents a strong uptrend. However, suppose a lower wick starts to present. In that case, the upward momentum is likely to decrease. On the other hand, a Heikin-Ashi candle with a red body with no upper wick represents a strong downtrend. Notwithstanding, just as in the previous scenario, if an upper wick shows up, then it is likely that the downward momentum is decreasing. Subsequently, a corrective movement or reversal could present shortly. Candle charts and Heikin-Ashi charts look quite similar to each other. However, if closely observed, you will spot differences. High, low, and close are based on a specific formula rather than actual prices for the period under consideration. When charts show candlesticks without wicks, or shadows, on the lower end, they provide a strong signal for the beginning of a bullish trend, which traders can follow to maximize gains rather than selling stocks early and leaving profits on the table. When candlesticks have no wicks on the higher end, they indicate the start of a bearish trend and prompt traders to sell stocks to avoid losses. The longer the sequence of candles without wicks, the stronger the trend it signifies. I hope you got a good knowledge about Heikin-Ashi. Now let's see how to trend with same in trading market. Now look at this chart. As you can see, that downtrend just started. Now look at this candlestick chart, which shows us a downtrend with all red candles but little bit of green candles, or we can say noise in this chart. This noise confuses traders many times. While look at Heikin-Ashi candlestick chart, which shows us clear downtrend with no noise. All candle in downtrend shows same color and wick at bottom of candlestick. This is the main reason behind the popularity of Heikin-Ashi candlestick. Now we will find out buy and sell signal with the help of Heikin-Ashi and other suitable indicators with it. But let me show you key point of Heikin-Ashi. Heikin-Ashi is a technical analysis tool that is becoming increasingly popular among traders. While it shares some similarities with other tools, such as candlestick charting, it also has some unique features that make it particularly useful for identifying trends. One key difference is that Heikin-Ashi candles are based on the average of the open, high, low, and close prices for a given period. This makes them smoother than traditional candlesticks, which can help to filter out noise and reveal underlying trends. In addition, Heikin-Ashi candles are colored according to whether the trend is bullish or bearish. This makes it easy to see at a glance whether the market is in an uptrend or downtrend. Overall, Heiken Ashi is a powerful tool that can be very helpful for traders who are trying to identify trends in the market. Just look at this chart. As you can see, that downtrend just started, but you can see some green candles. These candles are nothing but just noise in market. Now same chart we will see with Heikin-Ashi candles. So as you can see, that a very clear and easily readable downtrend shown by Heikin-Ashi candles. Now let's look out for best time to use Heikin-Ashi charts for trading. Heikin-Ashi charts are a type of candlestick chart that is used by traders to help predict future price movement. Heikin-Ashi charts are different from regular candlestick charts because they filter out some of the noise in the market and smooth out price action. This makes it easier for traders to identify trends. Heikin-Ashi charts can be used on any time frame, but they are most commonly used on the hourly or daily time frame. When using Heikin-Ashi charts for trading, it is important to wait for a signal before entering a trade. Some common signals include bullish or bearish engulfing patterns, dojis, and piercing patterns. Once a signal has been identified, traders can enter a trade in the direction of the trend. Stop losses should be placed below support or above resistance levels. So friends, I hope you undoubtedly clear about Heikin-Ashi candlesticks. Now let's watch out for sell signal. For sell signal we can see downtrend just started, but still we are not clear about our entry candle, so we will add 200 EMA and MACD indicator along with it, which will help us to find our entry candle. So friends, as you can see, we have added 200 EMA and MACD indicator. Now, as we can see at this candle is very good for our entry candle, which conforms by 200 EMA. And in MACD bearish crossover happened below to zero line, so we sure take sell trade at this point by putting our stop loss at high. Our entry candle and profit target would be 2 times of our stop loss. So as you can see, you had completed your profitable trade. Now if you are clear about sell trade, we should go ahead to find out buy trade. For buy trade, as we can see, that price started its upward journey and just break out 200 EMA, and in MACD indicator bullish crossover happened, which means MACD line crosses signal line down to upward direction, which shows the upward condition. Now look this candle carefully. Price started its journey to upward direction and in MACD indicator bullish crossover happened above to zero line. So we will take buy trade at this candle by putting stop loss at a low of our entry candle, and profit target would be 2 times of our stop loss. So by completing these steps you had completed your profitable buy trade. But kindly note one thing here. At this point we can see some red candles here, but we will not consider it, as price is continuing its journey above the 200 EMA. And MACD line continuing its bullish journey. So, this is the reason we will be in this trade until our desired target achieves. So friends, this comes to an end of our video. If you liked this video, be sure to press like button, and if you don't want to miss any of our knowledgeable videos, don't forget to subscribe to our channel.